Hello, folks. Brandon Chapman with you today. It's a Monday video for TheoTRADE. It is, it's March 11th, 2024. And boy, we're just about to see the expiration of the the Fed's bank funding program that's just about to expire today. And a lot of stuff happening right now. Of course, the big news is Nvidia. As Friday, we saw maybe the fever break, the bullish fever break, and option activity decidedly declined today. And initial weakness on this roll for the S futures, we're actually really pricing down here. We're basically flat on the session so far. So what's next for the market? We're going to look at a number of different opportunities, bullishly and bearishly. And just a quick hint here, we're going to lean more bearish at this point in time. So as we look at the VIX today, the VIX overall did virtually, bring it up here. The VIX did virtually nothing. We're up about 3% or about a half a point in the VIX. We're up against kind of resistance area around 16. We're not seeing any sort of real sharp movement in the VIX. At this point in time, we're not seeing a lot of selling in the market. Again, we saw a bit of a topping type candle formation. Then today we're seeing essentially a hammer type bottom. So again, we could go either direction, but one thing's clear is that we're losing some of the momentum that we had previously. And the fact of the matter is that as we see gold continue to perform relatively well, this really places into view the fact that the market itself, and I'm going to look at SPY plus GLD. And what I'm going to do is I'm going to bring up what's called a pairs ratio study. This creates a relative strength line of gold and the S&P, where gold is in the denominator, the SPY is in the numerator. And why this is significant is if I take SPY, well, SPY is priced in what? US dollars. If I divide that by GLD, which is similarly priced in US dollars, what happens? Dollars cancel, and we end up with S&P in gold shares, right? So it takes 713 gold shares, GLD shares, to buy one share of SPY. The actual value doesn't, 2.53 shares of GLD to buy one share of SPY. That number doesn't necessarily matter. It's the trend of the number. We've gone from upwards of about 2.75 to 2.53. The S&P has lost ground against gold over the last little bit over a week. And we're seeing that right now is that the S&P is back to levels in gold terms we last saw. We could literally go back to July or August of last year. If we strip out the dollar's effect, notice how the S&P has not been rallying. In fact, we're just off of the end of 2023's close at about 2.4 something, right? So point being is that this is where we finished the year in a relative strength. This is where we currently stand. But the fact of the matter is we could literally go back to about end of July, August 1st on the S&P, and we're trading at a similar value. Now, I realize the price of the S&P is higher. We're talking a price of S&P at 451. We're now at 511. So it's significantly higher in price. But remember, that is the dollar price. When we talk about value of the S&P 500, we are back to the same value we were at the beginning of August of last year. So the market is not this runaway freight train in terms of value. It's only a runaway freight train in terms of price. As the dollar's declined in value and as gold has accelerated its rally here recently, we're seeing that the S&P in real terms has dropped significantly, that it's been the weak dollar over the last 7 or 8 trading sessions that have masked over a lot of weakness in the broader market. And so this is happening. And again, S&P has basically gone sideways over that same period as gold is exploding. We've talked about the dispersion trade last Monday in my video. Don's talked about it extensively. The notion that Nvidia has been outperforming its allocation to the S&P 500. Today, it's down 2%. Well, guess what? The S&P ended up finishing lower. Let's look at some other components, some of the Magnificent Seven. Microsoft finished about 0.5% lower. Apple finished what? About 1% higher. Meta finished about 4% lower. Finally starting to see some of the break that Nvidia saw last week. We're seeing more and more legs of the stool get knocked out. Google was higher by about 1.6% today. So Apple and Google kind of holding things up. Meanwhile, Nvidia not exactly spoiling the party, only down 2%, whereas down significantly more. We had a 10% intraday decline from high to low on Friday. Now today, notice we formed some sort of kind of spinning top formation, a neutral candle kind of developing here, some balance or relative balance between buyers and sellers today. But remember, the thing that matters for Nvidia is the call volumes, right? The idea in believing that Nvidia can continue to outperform the S&P 500 significantly, right? And driving its performance while other areas collapse. Well, if we look at the call volumes today in Nvidia, notice something. The volume for calls was only 811,000. It ended up being about 68% of average over the last 5 days. On Friday, we had over 1.3 million contracts traded on the call side. It was a sweltering, like 1.3 or something. So we saw that escalation in call activity all last week until Friday happened, right? And then we began to see the fever break a little bit. So is this the beginning of a new trend for Nvidia? Well, we'll see. It's kind of hard to bet on that in the moment. As we look at implied volatility, let's just go 11 days out. Do we have positive vol skew, meaning rising volatility on the call side? Yes, we do. Falling volatility out here, we're seeing there's still this idea of buying calls and selling puts on Nvidia, thinking that we may see upside here. And so we finish relatively balanced between the buyers and sellers today. We're still finished with bullish volatility skew on Nvidia. But what we are seeing is a diminished amount of volume that is happening. Does this start to return towards more normal times? We may be going back weeks or months ago before we saw this crazy rally in Nvidia, before it went parabolic. So this was a significant day on Friday. And so the idea is that maybe some of the air out of the market balloon is coming out. Because if we think about Apple, is Apple in a great position to go to prior highs up here? No. Fundamentally, there's structural problems, right? Called earnings, expectations. That's holding Apple back. Certainly Google has succumbed to some poor earnings guidance, the poor performance of their AI. Microsoft is kind of sitting here in the middle, consolidating at the moment, did not participate. And of course, Meta today, as we talked about, breaking similar to what we saw on Friday in Nvidia. Is this the beginning of maybe some profit taking? And possibly, do we break 452 in the coming weeks? If we do, this does not bode well for the S&P 500. So we have to be measured in our response. So you could continue to try to ride the bullish wave in Nvidia. The option volatility is still skewed favorably. And it's probably very likely that Nvidia, following this kind of parabolic move, retests its prior high, either a high or the open up here somewhere between 952 and 970. But sometimes when we get that retest, it only occurs before we see even greater expansion in downside volatility. So this may take another several days or a couple of weeks to play out on Nvidia. It's probably going to be very difficult for it to take out that very significant high. This being a large engulfing pattern, you could call that a bearish belt hold pattern since we gapped up and closed lower. Either way, this area of resistance up about 950 is going to be a pretty significant barrier for Nvidia in the short term. Now, as we look at the commodity space, well, gold has taken off. It's been a huge rally over the last couple of weeks. Well, what does it mean now? Today's option activity certainly looks like the gold or silver or gold stock trade may have legs remaining. Now, remember, if we start to realize a significant downside move in the S&P 500, we're probably going to start to see the dollar strengthen, okay? In that case, gold will go down. Now, however, we may see continued dollar weakness, okay? and we may see just an erosion of value. But I would guess GLD is probably going to, from this level, is going to have a hard time accelerating its move to the upside. SLV, Bitcoin now at about or exceeding the market cap of silver. If you guys have watched Bitcoin, it has its next halving in April sometime. That's where they cut the reward in half for mining Bitcoin. But Bitcoin breaking out today at 73,000, overtaking silver in terms of market cap. But silver may have some legs left. We may consolidate here, but remember, we can't underestimate the fact that policy from the Federal Reserve and from the federal government is relatively expansionary in terms of dollars. But tomorrow, we have a CPI number. Well, what if CPI comes out hotter than expected? This could be deleterious to the market. This could be deleterious to the bullish movement we've seen in gold and silver if it's hawkish and it's going to force the Fed to potentially raise rates, in which we have a Fed meeting coming up next week. Not that they're going to raise rates, but the rhetoric may gear up if CPI and PPI, because it seems like we're starting to see long-term trends in inflation begin to turn higher a little bit. In that case, that creates a threat to the downside. Well, what if CPI comes in softer than expected? Well, all of a sudden, this may create a bullish reaction in silver and gold. So today, it was mostly in gold and silver stocks. Since we got SLV up, let's look at AG. AG is only about in the half point of the range going back to the sell-off from December to February. If we draw a fib retracement over that range, we can see again we're at the 50% mark. Well, if we start to break out, can we retest 650? Absolutely, that could happen relatively quickly. Today, it was for the March expiration, the $6 strike price out here of call buying on AG. Now, again, do you want to go with individual stocks or do you want to stick with funds? So, for example, JNUG, this is the 2 times leverage bullish junior gold miner ETF. Say that thing twice. Today we had a pause on Friday, engulfing Friday's move, opening below it, closing above it. And again, we look at the range here. We're at about what? We tested the 50% retracement today. We're breaking out. If that is a seed wave, I mean, it would reasonably see us go 36 to 37 up here, right? And that might happen in this current move. Again, a lot's going to hang on what happens with CPI and PPI in the coming days. On Tuesdays, CPI, Thursdays, PPI. But here's the deal. We could see, again, weaker inflation. May not be the base case, but it's possible, in which case that may drive the expectations of a Fed rate cut and drive gold and silver higher and continue to allow gold to outperform the S&P 500. Now, I wouldn't necessarily advocate trading JNUG, but could you trade GDXJ? Again, you don't have any additional leverage to trading JNUG over GDXJ. You could construct similar types of trades. So, for example, 39 days in 19 April, the volatility is rising out here. Could you buy a 37 and sell a 39, buy deep and wide, 1 month, 2-strike vertical? What does this mean? It costs you 70 cents. Where do you need it to get? $39, right? In how many days? 39 days. So you got 39 days for this thing to get back to highs from November and December. If it happens quickly, great. Shut it down. If it takes a month to get there, great. Take your profits at that point. But the idea, you got plenty of time for this thing to move. And with the cost of about 70 cents, your break even is $37.70. If you want to go a little bit lower at the 36 strike and go 36, 38, that's fine as well, by the way, because the volatility is favorable. You can decide where you want to be along the spectrum here, okay? So gold, let's look at GDX. Again, these are not junior gold miners. These are more established companies like Newmont, for example, being a top holding, Barrick Gold, GOLD being one of the top holdings here. Newmont having a significant breakout. We talked about Newmont back here on our Friday at the close. Blake and I a couple weeks ago, against made a huge move from down here about $30 to about $35 just over the last week and a half. But again, GDX. Well, GDX today, again, we're seeing kind of a similar kind of engulfing candle, near-term target 32. It's about $2 higher than its current value. And today it was a 15 March out here. 32.50. Okay, so 32.50 kind of brings that into view up here. Again, going back to prior highs. Give yourself just a little bit more time. Go out to April. You still have rising volatility. You can buy the lower vol, sell the higher vol. Buy a 31.33, right? Buy deep and wide, 1 month, 2 strike vertical. And what do you cost you? About 54 cents. Again, the upside target is 33. Our high is around 32.50. We could reasonably approach 33. It's only costing us 54 cents. Break even is at 31.54. If you want to go lower here, $30, buy deep and wide. Again, going 1 month, 2 strike vertical, 75 cents for a $2 white spread. That's not bad either. 39 days to get to $32, which is right here. Not bad. You get there quick. Okay, shut it down. All right. If it takes a month, okay, shut it down then. We're looking at a $32 target here, buying the 30, selling the 32. Again, the cost is what? It's only costing you 75 cents. If you could close that out for $1.30, great, do it. Okay. Hit 32, great, do it. Okay, you have lots of opportunity to do so and plenty of time for this to get there. But again, a lot depends on and hinges on the CPI and PPI data that's coming up this week. Okay, this could have a tendency to really move the dollar and gold. And boy, if gold starts to sell off here, that's going to be an indication the dollar strengthening significantly. That probably means the S&P is looking at downside. Well, let's look at one more bullish trade here in SBUX, a Starbucks coffee. We did fade off our high a little bit. We're at a floor of support down here in Starbucks. We're looking at kind of a near-term target up about 98. The trade today in Starbucks was for a March expiration again, relatively short dated out here at the 96 strike price, mostly bought. So we get kind of this near-term target, $96 here. Well, what could you construct? Well, if we go out here to April, we're $5 spreads. Let's go 12 April. Plenty of liquidity in here. A 93.95. We're expecting 96. Well, what does that get us? How much does that cost? Deep and wide, 1 month, 2 strike vertical. Costs you about 80 cents. Does that work? Sure. The volatility, you're buying 20.9 and you're selling what? 20.4. So there's a little bit of an impairment there, not a lot. But the reality is this can be hard to do an upside spread in this since we have pretty flat term structure here, but that's not terrible at a floor of support. If we touch 96, close it out. Okay. If you pay, 80 cents for it, if you could sell it for $1.30, $1.35, consider doing it. Okay. So a bullish setup here today in Starbucks. Let's move on to some areas that are maybe more bearish. Well, what about airlines? If you've heard any of the news over the weekend, if you saw Boeing today, take it on the nose, pardon the pun, but Boeing, I guess there's bearish activity in Boeing as well. So Boeing today, we saw the March expiration here at the 190 strike, 25,000 contracts. Do you look at, and again, I'm still relatively bullish on oil. Oil today was up slightly. I think we're going to make another run here. So again, I'm bullish on oil, which generally is not great for airline stocks. But again, Boeing today breaking a floor of support. If we, I'm going to just erase all the drawing set here. If we draw lines representing the fibs, we'd already broken through the 61. We're testing that as resistance. We're breaking through the floor. Makes sense. We'd probably roll back to 180 in Boeing. The March expiration here, we saw a lot of activity at the 190 strike. It creates a kind of a gamma level there. If we break that area, we're probably going lower. And again, the next major level, the next major floor of support's at 175. Well, again, if we go out here 39 days, the vol structure is favorable for buying a higher strike and selling a lower strike. A 190, 185 is going to cost you what, about 285? What if you drop to 185, 180? So go buy vertical right here. It's going to cost you $1.34 on a $5 spread. And we're looking at 180 being the floor of support here. So again, you risk $1.34 to make $3.66. Again, if you should close it out for maybe a 70, 80% gain, do so. But that's setting up reasonably well. Well, UAL today, United Airlines, wasn't exactly bullish. Oops. One of the trades I don't have any money in this account. Just keep a little bit in here just to have this thing. So, but anyway, today, if I delete this, look, 16,000, 15,000, 15,000 contract long put vertical, buying the 41 and selling the 35. Okay. Downside spread 35. Where are you? 35 is down here at support. Who says option traders don't look at technicals? You don't have to take that wide of a bet here, but even in the March expiration, we're seeing 16,000 contracts mostly bought at the 41.50. So what do we have here? April expiration. You don't have to go that low. Just come up here, 42.89. What if we buy the 42 and sell the 40? Cost you about 74 cents. Notice how the cost is always about the same. Why? Because we're on $2 white spreads and we're picking about a 40 delta. Okay, the next out of the money strike price. So again, if you could sell this for $1.25, $1.30, do it. Okay, if we fall to 40, do it, right? So there's ways to close this out. You don't have to stretch it to 35. We're just looking at 40 here as the downside expectation. $40 is right here. Could we translate that to Jets? Well, if we look at Jets, this one, there's some bearish activity about a week ago. Down Friday, we're kind of holding on today, but could we see a pullback to 1850? Absolutely, we could see that. So if we come in here to Jets, we say, okay, the same April expiration, we're at $20. Well, what if I buy at 20 and sell an 18? And again, what's the opportunity? It cost me 52 cents. My upside's 148. And there's still premium to be sold out here at the 18 strike. Why? Because it's 32% implied volatility against 28% here at the $20 strike price. The rising vol structure means there's something out there to sell. 52 cents of risk, $1.48 of upside. Again, if you could sell that for $1.10, $1.20, do it. Okay? These are the opportunities that are out there right now, playing the downside in what? Downside in airlines, as well as real estate, IYR today. Nice little run here. We're back up close to support again, aren't we? Well, clear the drawing set out here. Where's the next retracement going? Well, if we look at this kind of run right here, where's our retracement level? 61% is about 87. We measure this entire retracement right here. We hit the 38%. We're rallying off of it. Could we go to 82? Could we drop to 80.5, right? Could we go all the way back to 73? A lot just hinges on what? 10-year treasury yield. Yields moved higher today. If we make a run back at 4.3%, we could readily see a significant downside move in IYR. And again, today's trade is in the June expiration. It's out there a little ways. There's one that's shorter here as well. But June expiration, basically in the money slightly, 5,800 contracts on IYR, mostly bought. Also, let's look at March. 15 March expiration here, 21,000 contracts, mostly bought at the 89.50. So again, we're looking at downside expectations, option buying today, put option buying in IYR. It's also an MPW. Medical properties, we broke down. Could we retest 3? Absolutely, we could retest 3. Medical properties, this is the July expiration. It's a ways out there in July. But again, 2,500 contracts down here at the 250 strike. Probably adding to some prior buying we've seen in MPW. But again, we're seeing money flow on the bearish side of it for July. It doesn't create a lot of gamma because it's out there a little ways. 250s down here. But again, it's an indication of bearish money flows. IYR as well on this. Let's look at another area of real estate. Let's talk home builders, Lennar. Lennar's kind of up at an apex. There is earnings coming up. So again, this could create a catalyst for some downside movement in Lennar. The trade today is for the, it's the March expiration, buying the 155, selling the 148. And when is earnings going to come up? It's on the 13th. So again, this week. So there's a trade here, maybe an earnings related. Think there's going to be downside action. The market maker move for this week. based on the volatility skew between the 15 March and the 22 March. The volatility differential there is about 870. We're currently at 164. So we're talking about what? 150, 155. It's about where this is basically saying what? They're buying at about 1 times the expected move right here and saying they think it's going to go lower. So again, this long put vertical is suggesting we may blow that out into the downside in Lennar this week. Again, it's a relatively cheap spread, buying the 155, selling the 60 on a $7 wide spread. It's costing you about 95 cents. It's not terrible. Risk $1 to make 6. It's a pretty high reward to risk. Again, short amount of time here. Well, what could you do if you want to avoid earnings? You could go to ITB. What if we went out here 39 days again, right? The same kind of time frame, but again, just out of the money, 105, 110. Okay, $5 wide spread. It's going to cost you about what? $1.15. Risk $1.15 to make how much, right? We're currently at 108. If we go in here to the weekly expiration, 32 days out. Okay, now we've got what? 50 cent increments in here, right? 108.50, basically at the money. Sorry, basically slightly out of the money here, or basically at the money. 108 is just a little bit out of the money. Let's do a 108, buy deep and wide. 1 month 4-strike vertical here. It's going to cost you 83 cents on a $2 wide spread. You've got how many days? 32 days for this thing to get down to 106. Where's 106 here? It's right about here. Okay, decent chance of that happening, right? Market rolls over. We should see these symbols likely see downside in the very near term. Let's look at some Chinese stocks here. So we'll start with KWEB. This is the internet ETF. We faded from our high here. Now, again, it's been tough wanting to be long Chinese stocks. Okay. I was kind of playing, FXI on the downside here. It was a lot of bullish activity came in here and never really came to fruition, right? Finally started to see things break out here on the 6th, and today we're getting a nice move in FXI. Look at KWEB option activity. Again, it's kind of shooting star formation today, but we'll see what tomorrow holds. But in KWEB, this was a roll from March to April, and we go to the April expiration. Again, it was rolled to the $27 strike price. So indications, we got a decent amount of upside here to 27, maybe more. You draw your fib retracements, would not be unreasonable. We start to break this 27.60 of rolling back to 29. China's engaged in a tremendous amount of stimulus. We're talking about weak dollar policy. So if CPI comes out, the dollar's weak. This could help propel this. But the fact of the matter is Chinese policy has been relatively ineffective. So it's hard to kind of know what to believe. But here at the $26 strike price, could you buy a $1 wide? 26.8, 26.9. Not a whole lot of edge there, but a 1 point vertical, 39 cents. Risk 39 to make 61. That's a possibility. Billy today, right? Billy. Chinese stock as well had a huge breakout. It's coming off earnings, which was relatively negative in terms of response. Bounced on Friday, breaking out today. As we look at Billy, again, there's a lot of depth to this market in the monthlies. The trade on Billy was got to find it here. It was a roll to 28 March at the 13 strike price from March 11. So again, we got this roll in here. What kind of upside can we play here? Well, again, this is looking at 1261. What about a what? 1415? What about a 1315 long call vertical, right? Just kind of stay in that wheelhouse since the skew is in our favor, similar to Nvidia to the upside. Rising skew here and buying 71, selling 74% implied volatility. The spread's relatively cheap at 55 cents, risk 55 to make $1.45. All we need is 15 in the next what? In the next 39 days. Okay. And so as we look at the area of opportunity, again, bullishly and bearishly, again, a lot is going to hinge this week on what the dollar does. And I'm not exactly talking about DXY or $DXY, right? this is predominantly weighted against the euro / US dollar, right? The inverse of that. So again, there's the relative performance of the dollar, but I can't type the symbol incorrectly here. There's the relative performance of the dollar, which has strengthened the last 2 sessions a little bit against the euro, but there's also the real weakness in the dollar, which is manifested as if the gold continues to strengthen here. So we'll have to watch. CPI tomorrow could create some volatility for both the market and gold, especially since Nvidia is fading right now in terms of its call activity. So again, we may see it reemerge. We may see another run again, retesting prior highs. But Friday should have been a wake-up call, and today, being only at about 60%, 70% of average in terms of volume, suggests that we are seeing some weakening interest in Nvidia as well. So be careful here. Slippery slope this week. We'll catch you back next week on the video.